Good afternoon. Thank you for joining today's webinar, which introduces Oracle's newest cloud software offering, Strategic Modeling, and shares important insights and results related to this highly robust and comprehensive solution. During the webinar, you may submit questions in the right-hand panel on your screen, and we'll leave time at the end of the presentation for a quick Q&A. Today's presenter is Andy Starks, Practice Director at Edgewater Ranzel. Andy has over 13 years of experience working with business analytics solutions. He formerly worked for Alcar, the company that originally developed the Hyperion Strategic Finance technology. He continued with Hyperion after its acquisition of Alcar. In 2007, Andy co-founded Meridian Consulting, an HSF-focused consultancy, and grew that business rapidly before it was acquired by Edgewater Ranzel in 2010. And he now co-manages the HSF practice at Edgewater Ranzel. Andy?
Thanks, Joey. Good afternoon, everyone. Welcome to today's webinar. In terms of agenda, I just wanted to cover off a few slides on Ranzel and then get into a discussion around what is strategic modeling and how it fits into Oracle's enterprise planning, budgeting, cloud services, otherwise known as EPBCS. So do a handful of slides up front, and then the bulk of the presentation will be a demonstration of strategic modeling. Then we'll follow up with some Q&A. So as Joey mentioned, feel free to include any questions you have in the chat box, and we'll take those all at the end of the session. So as you can see off on the right-hand graphic, Edgewater Ranzel has been in business now for over 20 years. And during the span of that time, we have over 1,000 clients, and we've done over 2,000 projects, primarily in the enterprise performance management space, working with Oracle. And then also more recently now, looking at business intelligence, big data, and some of the cloud offerings of Oracle. So this graphic right here shows you the broad width of services that Edgewater Ranzel provides. Right now, we're working a lot with Oracle's cloud offerings. Today's webinar is going to be focused on the first one, enterprise planning and budgeting. But we also offer services in all the other cloud offerings of Oracle as well. We also do big data, we do training and education, infrastructure and support, advisory, business intelligence, and then of course the on-premise versions of enterprise performance management. So in terms of our relationship with Oracle, we have the highest status that Oracle provides, which is Oracle Platinum Partner. We've had that for quite some time now. We're on their Partner Advisory Council. And we also have 2 Oracle Aces, which is the highest achievement an individual consultant can get. And there's only a handful of those across the world, so we're very proud of those 2 people on our staff. In total, we have over 200 consultants across the entire Oracle Business Analytics suite. A lot of these consultants have been with us for many, many years and have extensive experience in multiple products across Oracle's offerings. We have a very close relationship with Oracle product development. We've helped them actually develop some products, most recently helped out with the PCMCS profitability and cost management solution. We do some beta testing, so I recently helped Oracle do some beta testing on the strategic modeling module, which we'll go through today. We serve on their customer advisory board and other relationships that we have with them. So through all this, through our relationship with Oracle, through our vast experience, we've developed best practices in terms of how to plan, design, and implement integrated Oracle enterprise performance management, BI, and big data solutions. So that's what we really specialize in. And we have specific methodologies, templates, and tools that allow us to effectively implement these solutions for our clients. Okay, so with that, I'm going to get into a background on strategic modeling. This is a brand new product. It was just released last month in June of 2017. Some of the key highlights is it's a cloud product. It's part of Oracle's enterprise planning, budgeting, cloud service. So what that means is that the infrastructure itself, there's no hardware associated with it. Oracle would manage that in their own data centers. As end users, you guys would just log into the cloud and really would have minimal IT involvement. to manage your applications. In terms of what it does at a very high level, it's a long-range planning and modeling tool. On the next slide, I'll get into much more depth in terms of what that means. But it's designed to be owned by business users. So everything about it is point and click, very easy to update formulas, to manage your metadata, to do the integrations from a data perspective, and that's all owned by business users with very limited IT involvement. In terms of the interface, there's both a web and an Office interface. So really all you need is a browser and Excel, and you can interact with strategic modeling. We'll walk through both of those interfaces during the demonstration today. For those of you that are familiar with Hyperion Strategic Finance, it's functionally consistent with the on-premise version of Hyperion Strategic Finance. So it has a lot of the same capabilities and functions that'll look familiar to you, but it is a new product. It's been re-architected and redesigned for the web, and there's some new functionality that's been added to it in the process. For those customers that are existing HSF customers, there is a migration path, so you can take your models, not lose any of the good work that you've already done. Those will migrate up to the cloud and convert in the process, and you can use those in a cloud environment. And the last piece is just that it's fully integrated into the planning cloud platform. So it's part of EPBCS. You can integrate your short-term plans with your long-range plans. So all of that connectivity is baked into the solution, and we'll talk about that a little bit later on in the demo. So this slide just shows a more detailed view of what the use cases are for strategic modeling, how it's used across organizations. So really, it's a modeling solution, and it's designed to span various functions of the finance function. So FP&A often will be tasked with developing a long-range plan for the next 5 years or 10 years. And with strategic modeling, you can easily do that because it provides driver-based forecasting. You're able to quickly change forecast methods on the fly. There's consolidation capabilities that allow you to automate how businesses, BUs, regions will roll up, and it handles more complex consolidations. So it's not just a straight aggregation. It will do minority interest equity method consolidations. From a corporate development perspective, oftentimes corporate development is tasked with modeling out acquisitions, divestitures, JVs, projects, doing valuation analysis and all of those on a standalone basis, but then also integrating that back in to the long-range plan so that they can see what the pro forma impacts of these transactions are going to be. So you can easily layer those transactions in, understand if it's accretive or dilutive to earnings per share, impacts it might have on your credit ratings or covenants, and other key considerations of these transactions. Then in the lower right-hand quadrant, we have treasury analysis. So treasury often will use strategic modeling to do things like share buybacks, look at dividend policies and what the impact of a dividend increase or dividend cut would have to their cash flow position, what their covenants will look like on a prospective basis. So going out over the next 5 years, if we invest heavily in something or acquire a company, might we break a covenant or get downgraded? So we'll often build in like Standard & Poor's and Moody's credit rating metrics into the system so that can be analyzed and compared across various scenarios. And there's also great capabilities around scheduling out debt. So there's a debt scheduler utility, there's a funding routine that allows you to establish how cash surplus should be used, or if you have a cash deficit, what the order of operations would be. Maybe you want to first sell your marketable securities, then you want to draw upon a revolver or buy commercial paper, or sell commercial paper, I should say. The funding routine will handle that process for you. So there's some great out-of-the-box content that comes with strategic modeling to assist Treasury. And then finally, in the upper right-hand quadrant, we have Ad-Hoc Scenarios. So it's really having the capability to run unlimited on-the-fly scenarios across any of these items that we just talked about. Being able to do goal seeks for desired outcomes of key outputs, so whether it's earnings per share or return on invested capital or whatever your key business outputs are, you can seek for that using the goal seek functionality within strategic modeling. And then there's also a business case concept, so you can roll up different scenarios and have as many scenarios as you want within an entity or a model, but then from a consolidation perspective, you can put those together in a business case. And I'll walk through that in the demo in just a little bit. So all these disparate modeling activities oftentimes are done when we first get into a client. They're done in Excel, and a lot of times there's disconnected Excel models between the various finance functions. So strategic modeling can pull all that together, provide one platform to increase collaboration across the organization and handle all of these modeling activities comprehensively in one solution. All right, so I mentioned that as part of EPBCS, and what EPBCS is it's enterprise performance, or I'm sorry, enterprise planning, budgeting, cloud service. And what that consists of are these icons that you see over here on the right. So there's strategic modeling, which we just talked about. There's a financials process. There's a projects process, capital, workforce. So these are all out-of-the-box capabilities that come with EPBCS. And then you also have things that are common to each of these 5 processes. So you have tasks, reports, the academy, which is online help, different tools that you can utilize. So they're unique models, if you will, but they have a lot of common underpinning. It's the same user interface that you would use to access each of these. So there's also a lot of commonality across each one of these processes. So just at a high level, what do they do? We talked about strategic modeling already. Financials is really going to be a tool that has some out-of-the-box capabilities around driver-based or trend-based P&L forecasting. It's traditionally going to be done more for your short-term forecast, so your operational budgets, your rolling forecasts, things of that nature. It also has some great out-of-the-box capabilities around modeling out the working capital section of your balance sheet. The workforce module will allow you to do compensation planning at an employee level or at a job level. Capital planning can be used to handle all of your investments, looking at it on an individual asset by asset basis. And there's a lot of out-of-the-box calculations to then calculate depreciation and everything else associated with it. And then projects is used to do project-based financial planning, where you have an internal framework for looking at different cost pools, what the resourcing would be in terms of staff these projects, as well as what resourcing you would need from an expense or a capital perspective. And then once you've modeled out these projects, taking a look at the net present value, the IRR of the projects, and then also how these various components would fit back into the financial statements. All right, so let's get into the demo. I'm going to flip over into my browser. So I'm using Chrome, but you can use any browser. You can use Firefox, you can use Explorer. They're all available and will work. You just need to have a browser. Log into your website, and it'll bring you to this opening web page, which will give us all the individual modules of EPBCS. So you have strategic modeling, financials, projects. And within each one of these, I can click on it, and you're going to see some sub-menus underneath there. And I can click on those and obviously interact with those and work with each section of the module. In this case, we're going to focus on strategic modeling. So if I click on that, the options are to work with our templates. And templates are the basic building blocks as we're first starting out and building up models. There's some out-of-the-box templates that Oracle provides that will give you integrated income statement, balance sheet, cash flow, and all their reports that come out of the box. So you start there, pick a template that you want to use as your starting point, and then start building out models. So models are going to be the individual models that comprise your strategic plan, and that could be BUs, it could be product lines, it could be regions, however you want to build up your strategic plan. And then you have model consolidations. I'll click on that. And you can have as many consolidation structures as you want. This is just how your individual strategic plans are going to roll up to get to total company. So as I expand out group consolidated, you can see that there's a services division. which has US services, UK services. There's commercial products, there are consumer products, and within consumer products, we have a couple of product lines. And then there are various attributes over here to the right. So one thing you'll notice is in this column right here, we have the consolidation method. In this column, we have the ownership percentage. So if you have any joint ventures or partially owned entities, you can specify that right here. So in this case, UK Services is set up using an equity method consolidation, 50% ownership. So strategic modeling knows the accounting behind that. It's not going to consolidate up full financial statements. It's going to book the equity pickup and the investment and sub on your balance sheet. So it's going to handle all that complex consolidation logic as we run and roll these things up. Obviously, you can change these. Other methods that are available to you, there's the cost method, equity method, minority interest method, and then a full consolidation. Okay, this column right here represents a scenario. So we can have different business cases and roll up distinct business cases. So right now I have base. Let's say I want to roll up upside across all of my entities. I can do that and roll that up as a separate business case. You can also do things that are different than just scenarios, right? So I could say we want to acquire an incremental 25% stake in our UK business. If I select that, you notice that this has changed now to minority interest method, 75% ownership. So I could have different cases and roll those up. And at the top of the house at Group Consolidated, I can compare this business case where we're acquiring an incremental 25% stake versus our base case where our consolidation method is equity method, 50% ownership. So there's very powerful capabilities both in terms of what you can do from a consolidation perspective as well as mixing and matching different business cases and comparing those at a consolidated level to see what the impact is on your key financial statements. If you wanted to add to this, very easy to do that as well. I'm just going to click on this little box over here, and it's going to give me a list of all my available models. So if we want to add in, let's say we've modeled out an acquisition target. I have one right here called Target Blue. I can drag and drop to wherever I want that to be a child of. So if I want it to be a child of the services division, I'm going to drop it right there. And I just need to tell it what scenarios correspond, what scenarios we're going to contribute from this particular entity, Target Blue, to each business case. So we're going to do base to base, upside to upside, downside to downside, and then for acquired 25% stake, we'll do the base case again for that. So after having done that, it adds that into the consolidation structure, and now I can run this consolidation with my acquisition target built in. If I wanted to set the periods to consolidate, we can do that here where we can say, you know, even though we have all this history that we're using to model out this acquisition, we're only going to consolidate up the periods that we own. So there's a dynamic deal period that allows you to start the consolidation at the deal period and ignore any data that might exist prior to the deal. So you can apply that. You also have the ability to include and exclude. So I can exclude this target from the parent business case or all business cases. And that way I can run it with and without my target to understand the incremental impacts of consolidating up that target as we roll it up to Group Consolidated. So that's really what I want to show from a consolidation perspective. Now I'd like to talk about what you can do in terms of modeling within an individual entity. So if I click over on my Models tab, you're going to see a list of entities here. I'm going to go to product line B and highlight that. And if I come over here to my action menu, I can either open it and check it out or open it as a copy. Checking out just means that you want to save your changes back to the server and you'd have a lock on that. No one else would be able to edit it while you're working on it. So it opens up this model. You can see here we have, we're on our accounts view. And the accounts view is really all the accounts within this model. And then we can navigate by looking at subsets of that and creating different account groups. So you go to all accounts and see everything, or if you just want to work with your income statement accounts, you can highlight that and click on this arrow over here. And now we're just looking at our income statement accounts, and you can see that all the way out until the end of our forecast horizon, which is 2021. To the right of the accounts view are various reports. So if we look at our income statement, these are all out-of-the-box reports. So when you open up strategic modeling, you're going to get these automatically. Obviously, you can configure these to mirror your chart of accounts, but they are provided and available to you, and these financial statements are fully integrated out of the box. Some of the things you can do on the reports, obviously view the results, but we can also analyze how we got to this result. So if we want to see, for instance, how we got to this gross profit number of 389 in 2020, I can come over here to my actions menu and click on Audit Trail. And that's going to bring up a description of this forecast method and both words and numbers, how that was derived. So you can see that it's taking operating revenue, subtracting out cost of sales. If I want to drill into one of those values, I can continue to do so until I get to an underlying input assumption. So we can see here that consumer product revenues is taking prior period, in this case 2019 revenues, multiplying by 1 plus a growth rate of 4%. If I want to change that growth rate to, let's say, 8%, I can type that in here, hit enter, and now update my model. And you can see that that's now changed to 766 and 406 down here for gross profit. So you can drill all the way back through to underlying input and change that. You're not actually changing the report. What's changing in the background is this accounts tab. So if we were to flip back over the accounts view and scroll up to my consumer product revenue, which is right here, and then just scroll across, you're going to see that that 4% was changed to 8%. If I change it directly on the accounts tab, there's some nice visual cues. So if I change that to, let's say, a 0% growth rate, you see that that changes to a yellow color coding, which indicates that I've changed that assumption, but I haven't calculated my model yet. So let's say I calculate my model. Then what it will do is show me everything that's changed as a result. So anything that is dependent upon consumer products revenue is now showing up in yellow. I can see that obviously my revenues changed, but also a lot of my costs changed because those are forecasted as a percent of revenue. So some of my cost of sales, SG&A line items have changed, as well as my subtotals for earnings before taxes for net income. So it's quite powerful. You can see exactly what's changing, what's dependent on what. And then when you're happy with those changes, you want to save them, you just hit the save button up here, and it'll go back to the normal color coding. So not only, you can change the input assumptions very easily, but you can also change forecast assumptions on the fly. So let's say, for instance, we want to change our formula for consumer product revenues. I'm going to click on this actions button, and I'm going to go to account forecast. And that's going to allow me to toggle to any other out-of-the-box method. So if I click on growth rate, you see here there's about 8 methods that come out of the box, and they're just some of the most commonly used methods. So you don't have to write a formula or anything. You can just easily toggle between and change it. So if you want to use actual value, or if you have seasonality in the business and you want to use a growth rate year over year, you select that, percentage of another account, or anything that's margin-based, days and turns for some of your working capital items, and then multiple other accounts. Those are all available to you. In this case, let's say we want to write our own formula. We want consumer product revenues to be a function of price times volume. I'm going to change the type of method. Instead of using the standard out-of-the-box methods, I'm going to create a free-form formula. So click on that box, and here I could type in my formula. I don't need to know any coding or calc scripts or anything like that. Everything can be point and click. So if I click on this edit button, it's going to give me a list of all my variables. and I just type in the variables that I want. So in this case, I want volume, and that's going to appear. I can just double click on that, and it's going to show up over here. I have my operators up here, so I'm going to multiply volume by my average price. And I'll double click on that, and it's going to put that account reference in there. And so we're done. If you want to do anything more complex, functions are here as well. It's pretty much the same functions that you have in Excel and the same syntax as Excel. It uses an @ symbol instead of an equal sign, but otherwise it's pretty much identical. Okay, so with that, I can click Save here. I can put my formula in here. If I want to type description of the method, I can just type in price times volume, hit apply, and close. And now you'll notice that my description of my method here says price times volume. My input row is changed to none. There's no input anymore because we're calculating this using a formula that's taking price times volume. If I calculate, it's going to show again that everything that updates that's a dependency of consumer product revenues is updating. And I can save that off, and I can go in and edit, or I should say analyze this if I just want to confirm that it is taking price times volume. So you can see that now it's taking volume times price. I can drill into those assumptions now as well and see how volume is being derived. So very easy to visualize how the models are being built up, understand the calculations, also very easy to change formulas on the fly as an end user. You can do that for the income statement. You can do that on any of these reports. The balance sheet, obviously, going to determine what type of scenario it is. So you have standalone scenarios, which you kind of build up from scratch. That if you use the inheritance option, that's usually a little faster and easier to use because you can take an existing case as a starting point and then just tweak some of those assumptions to get the values you want. So in this case, we're going to use the base case as our starting point, and we're going to say that we want to sensitize a couple of accounts from the base case. So we're going to sensitize our volume account. I'm just going to check that. And then I'm going to type in fixed capital investment. And we're also going to sensitize that account. So those two input values will be distinct from the base case. Everything else will be the same. I'm going to click add, and then I'm going to hit create. And I've just created that scenario. Now all I need to do is go in and make my assumptions for this CapEx scenario. So I'm going to go back to my accounts tab over here, and I'm going to flip to my CapEx scenario. And then there's also an account group in here called current scenario only, which is going to show me only those accounts that are part of this current scenario. So there you see just volume and fixed capital investment. So let's scroll over to the right. I can come in here now, and it's going to initially drop in the assumptions from my base case, but I can sensitize these two variables since I've included them as part of this CapEx scenario. So let's say in 2018, instead of investing 90 million, which is our base case assumption, we decide to invest 120 million. And then in future time periods, instead of volume growing at, declining to 7.5 and 3% growth rates, let's say we can maintain a 10% growth rate in volume with that additional fixed capital investment that we just made in 2018. So I've dragged that across. We have 10% rate there. So now I'm going to go in and I'm going to calculate this scenario. And you can take a look at our income statement. Really, any of the statements we can compare side by side and see how they change. So here we're looking at EBIT of 215 million in my CapEx scenario. If I toggle back to my base case, you can see that it's 180 million. So we can compare each scenario by toggling. We can do that in any of our reports. Or if I want to compare these scenarios side by side, I come back to this report over here, my scenario variance report. And I'm just going to flip this back to the CapEx scenario. So that's the active scenario. And then that'll show up in my column G now. So there you see the CapEx scenario. We end up with a return on invested capital of 27.7%, which is slightly below our base case return on invested capital. We can understand why if we look at our variances. You can see that we have an additional 30 million of gross fixed assets, which is obviously driving the investment side up. We didn't increase our volume until 2019. This report is just looking at 2018. So our volume is the same as the base case in 2018. So that's why in this particular year, our return on invested capital is slightly lower. But in future years, you would expect that our ROIC would be higher in our CapEx scenario. And we can obviously change the point of view to look at that. Let's say, however, though, that we want to do a goal seek to get our ROIC in our CapEx scenario at least equal to the 28.3 that we have in our base case. So that's another type of analysis we can do by clicking on Actions and Goal Seek. I'm just going to select the account here. So my account is going to be return on invested capital. I'll just type in part of it and it'll narrow it down. Select that. What scenario do we want to run it in? We're going to run it in the CapEx scenario. The time period we want to run it for. In this case, we're going to do 2018. Our goal that we want to seek for. So let's say we want it equal to the base case of 28.3%. I'm going to set that in there. And what account are we going to adjust to get it to that level? So let's say we think we have some room in our price. We can increase our price. and see how much we'd have to increase our price by to hit that target. So we can increase it either for one period, or we could do a time series. In this case, I'm just going to do one period, 2018 as my start period, and 2018 as my end period. And then I can hit the seek button right here. And it's gone through and adjusted it. You can see that my value here is 28.3%. If I want to take a look at it, specific results for average price, I can do that here. If I'm okay with the result, I hit apply. If I don't like them, I hit cancel. So let's say we like it. Let's hit apply. It goes in and it makes that adjustment to price. So now we have the ROIC that we want. And you can see up here that our price was 39.52 in the base case. It went to 40.29 in the CapEx case. We increased our price by 76 cents, but it gives us the ROIC that we want. So with strategic modeling, obviously pretty easy to create scenarios and change input assumptions, but also easy to seek for particular outputs that you want to get to using the goal seek functionality. Okay, so all this functionality that I just showed you, so far we've been working on the web, but you also have the same capabilities within Excel. So I'm going to flip over to Excel now. And inside of Excel, you have your typical menus up here on the top, but over to the right, there's a couple that are specific to Oracle's EPM solution, Smart View, and then strategic modeling, which is obviously what we're working with right now. And so we just did goal seek, scenario manager. So all the different items that I've been showing you so far are also available in Excel. You do have to access them through Smart View. So all you have to do is click on this panel over here, and the panel is going to show up. You connect to a specific server address, which you can see right here. And then you're going to see underneath it your consolidation structures, all your individual models, and you can go ahead and open those, check those out, and start working with them. So I already showed you guys some of the functionality within product line B. So I won't repeat any of that in Excel, but let's take a look at our group consolidated and some analysis that you might want to do at a consolidated company level. So right now I'm on this capital structure report, and one of the great functionalities within strategic finance is you have this tool called the funding routine that allows you to specify how you want to utilize cash surpluses, or if you have a cash deficit, how you want to fund those deficits. So if we take a look at our cash line right here, you can see that it's increasing over the duration of our forecast horizon to the point by year 5, we have over $2 billion. This file is in millions of dollars. We have over $2 billion in cash and cash equivalents by year 2021. So let's say instead of that sitting in the bank and getting a pretty meager interest rate, you might want to utilize that to pay down some of our debt. So we can do that using the funding routine. And the way that I'm going to go about showing this, I first want to create a scenario just so you guys can see before and after. So I'm going to create a quick scenario. Hit the plus sign here. Call this Treasury, for lack of a better name, and click OK. And now what I want to do is go into my funding routine. So again, this is out-of-the-box content that allows you to specify how you want to apply any cash surpluses that a business is generating, or if you have a cash deficit, how you're going to fund that deficit. And you create an order here. So it'll go through each one of those line items until it reaches 0 or some minimum that you specify, or if it's a deficit, some maximum that you specify. So let's say instead of accruing cash, we might want to pay off some of this high-priced debt. We have junior subordinated debt and senior subordinated debt. I'm going to go down here and check those boxes in the surplus category. Okay, and that's going to add that to our list, and then I can drag and drop to create the specific order that I want and how we're going to apply these cash surpluses. And let's say also maybe we want to do a share buyback. So after we pay down this high price debt, we want to execute a share buyback. So we have some assumptions built into the model for that. And if we have excess cash, we're going to go ahead and execute on that share buyback. So I drag and drop and create a routine, and so it's just going to go through each one. And if there's excess cash, it's going to pay down short-term debt until it reaches 0. And then it's going to pay down junior subordinated debt until it hits 0, and then so on and so forth. And as we go through each line item, until finally, after we've gone through everything else, the last thing that it's going to do is going to purchase marketable securities. Okay, so having set that up, I'm going to click OK, and I'm going to calculate my model. So you notice that our cash balance has gone down to a minimum that we specified. I think we set it to be 1% of operating revenues just for working capital purposes. So we're always keeping some cash on hand. Anything above that can be used for our funding routine. So we're using that to pay down our junior subordinated debt. You can see that's fully paid off in 2019. Then we start paying off our senior subordinated debt, and that's fully paid off in 2021. And then if we go down here, we have some assumptions for our share buyback, number of shares that have been authorized to buy back, we get some share price assumptions. So we have a share price for stock repurchase. And then we have our weighted average shares outstanding. You can see that it was 175, and then in 2021 that dips down to 166 as we bought back some additional shares. And again, you can toggle between. So if you want to see what the impact was, we can go back to our base case, refresh that, and you can see now our cash is where it was, our debt was where it was. We have 175 million shares outstanding. But maybe what you want to do is see what type of impact that has on your earnings per share, or what type of impact that might have on a covenant. In this case, we have a fixed charge coverage ratio. So we can take a look. In our base case, we had $7.06 in 2021 of EPS. If I go back to my treasury scenario and refresh that, you can see that it's $7.66. So we've gained 60 cents, by the 5th year of our plan by reallocating our capital and optimizing our capital structure. So some pretty strong capabilities to do that. You can also issue new debt. So there's a debt scheduler utility in here. If I come back to my new junior subordinated debt line item, I can go up to my debt schedule, create a new schedule, and say OK. And this is a tool where all I have to do is type in the key parameters, and then strategic modeling is going to do all the math for me, all the accounting for me, put everything in the proper placement on the P&L, balance sheet, and cash flow. So you just type in term. In this case, we're going to say it's 5 years. Principal, let's say it's 100 million. Issue costs, let's say those are at 1%. We can expense those as incurred or amortize them over the life. We can calculate the current portion of long-term debt automatically, and it'll reclass that on our balance sheet. We can set up payment schedules in here. So let's say we have semi-annual payments, 10 million every 6 months. Create this schedule, and it'll show me the specific dates that we're going to make payments. Come over here and calculate interest. You can do it on a 360-day basis or 365. It can be variable, spread over some benchmark rate like LIBOR, or we can have it be constant for all periods. We go ahead and type that in, and then click OK. Calculate my model. And it's going to go ahead then and put in my new junior subordinated debt. Not only on this report, but on my income statement, on my balance sheet, that debt instrument would appear on my income statement. Obviously, my interest expense, my debt amortization costs would appear. So it's going to handle all the accounting impacts associated with the debt issuance, and it's really quick and easy to build it out in this manner. So other things that you can do at a consolidated level, you can take a look at credit ratings, and so we can build in metrics that Standard & Poor's or Moody's uses to rate companies, and come up with a composite bond rating for your company based on your strategic plan. So what might happen going forward, looking at various strategic alternatives, and obviously you can flip between various scenarios that we have here to see how your bond rating might change across these different scenarios. The other thing we can do is take a look at valuation, and this particular graph is showing how much value each one of our business units contributes to total company. So you can see consumer is obviously generating the most value, commercial a little bit less, services $3 a share, corporate is a drag on our valuation. We subtract out the market value of debt to come up with our valuation as a company. You can see it's $44 a share, which is also over here. And then we can compare that to what our current stock price is and take a look at, based on our strategic plan, what we're projecting out for the next 5 years, whether we think the market has us overvalued or undervalued, and then take actions accordingly, right? So obviously some pretty powerful capabilities that you can do at a consolidated company level in terms of valuation, issuing debt, looking at your capital structure, and everything else that we talked about from a product line perspective as well when we're looking at the product line B model. Okay, so that's really what I wanted to show from a demo perspective. Just to wrap up, and then we'll open it up for questions after this. So some of the key takeaways that I hope you guys learned during this demonstration is that strategic modeling is great in that it allows organizations to quickly and efficiently model out long-range financial forecasts with a lot of out-of-the-box capabilities, especially the integrated financial statements is a key component to strategic modeling, and the fact that that's there out of the box and all we have to do is configure it to match your chart of accounts. You can easily run scenarios on the fly to understand the financial impacts of key decisions and evaluate a lot of different alternative strategies and compare those side by side. You can incorporate treasury and M&A activity into the strategic modeling process, again, with out-of-the-box, purpose-built functionality for things like the debt scheduler, the funding routine, deal period, and all the valuation reporting that's embedded within it. Now that strategic modeling is in the cloud, it's obviously it's going to be much more easier to use. A lot of the back office IT functionality that complicated this type of solution in the past is gone away. Oracle is going to handle all the IT pieces of it. They're going to provide the monthly updates to it. They're going to handle the sizing of the server box, the nightly backups, and everything else. And you can just focus on the models and what you need to do to make it work. And lastly, you can seamlessly integrate the budget and forecast process with the strategic planning process using some of the out-of-the-box integration capabilities. I didn't show that during this demonstration, but we do have another demonstration coming up in September that's going to focus on how we can integrate all these various components of EPBCS from a budget forecast and long-range plan perspective. Okay, so with that, I'm going to wrap it up and open up to any questions that you guys have.
Thanks, Andy. Yeah, but the time that we have left, let's see if we can address as many questions as possible. First question, is there a way to post elimination entries in the consolidation module?
Yeah, you can post elimination entries. There is elimination within the consolidation entity characteristics. You can set up elimination groups and specify specific items and accounts that you want to be eliminated at specific levels of the consolidation. Other clients will choose to have elimination entities built into the consolidation structure. So there's a couple approaches that you can take to manage that, but it's definitely possible.
Okay, next question. How can I integrate my long-range plan in strategic modeling with my financials module if I have different levels of granularity, for example, dimensions?
That's a good question. So what we'd want to do is just make sure that there is some commonality between there. So strategic modeling is typically done at a higher level of detail than your budget forecast process would be done within the financials process. But within the hierarchy of the financials process, we'd want to have certain roll-up points embedded within there. So if, for instance, you have 100 line items in your SG&A section in financials, we'd want to make sure that the key subtotals that you want to plan at from a strategic plan perspective are built into your account hierarchy within the financials process, so we have a one-to-one relationship and we can pull those across into the right level of detail. From a dimension perspective, a lot of times some of the detailed dimensions that you might have within the financials process won't be part of your strategic plan process, so we just drop those. So something like a department, for instance, a lot of times you might budget at a department level, but you're not doing a strategic plan at the departmental level. So that's fine. We just take total department and bring that across during the mapping exercise.
Great, thank you. Okay, how do you security protect the various scenarios from accidental changes?
That's a good question. There's a couple ways that we can go about that. I think the one thing that maybe you saw was when I selected the accounts that I wanted to be part of my CapEx scenario, I selected those two accounts and I went to current scenario only. It showed only those two accounts. Everything else within that CapEx scenario, all the other input assumptions would be grayed out and you can't input. So you are limited by the technology itself in terms of what accounts you specify in there, and you wouldn't be able to accidentally overwrite any of the other accounts. So that's one way. The other way is from a security perspective, you can lock down which users can access which scenarios and make changes to those scenarios. So for instance, if one group is making the scenarios and maybe you want the other groups to be able to see it but not edit it, that's something that you can lock down from a security perspective.
Okay, great. How is actual data loaded into the system?
So actual data is loaded into the system. It depends where it's coming from, what the source is, right? So most likely the source is going to be another cube sitting within EPBCS. So maybe like the financials process, for instance, you have actual data already in the financials process, and then we can run some scripts to bring that across. There's two integration capabilities. The one that exists today is called Groovy, and that involves some scripting to bring that data across into strategic modeling. However, Oracle has on their roadmap, I think for next month was the last I heard, in August, they're going to be introducing the data maps functionality, which is the same mapping functionality that exists for all the other modules of EPBCS, is going to be available for strategic modeling. And at that point, you'd be able to use that utility to bring your actual data into strategic modeling.
Okay, can we import current models from Excel into HSF? As a case in point, can we import the underlying models and then point the chart of accounts to a revenue number in the model that was imported?
You can import it at present. You can, as we're working in Excel, there's various forms within Excel that you could get the data into that form, and then you could submit it back to the database. So it's certainly possible to do it that way. But the primary mechanism for loading data into the system is going to be using the data maps functionality that I talked about, as well as the Groovy integration capabilities.
Okay, this is a good question. Does the cloud version still have a way to push HSF data to an Essbase cube? We pushed to an Essbase model for reporting users. We didn't want an HSF directly.
Yeah, absolutely. So within EPBCS, there's a number of cubes. There's BSO cubes, ASO cubes. So there you can create a consolidated enterprise reporting data store for all your strategic modeling data, as well as if you want to combine that with anything from the other processes, you can push all of that into a reporting cube and view it there. So that's certainly possible in the cloud as well.
Okay. Can I spin an Essbase ASO cube from strategic modeling?
They are. I don't believe so. I know that you can obviously map source to target, and from there, if you get into a BSO, then you probably have the ability to take it to an ASO, or you could send it directly from strategic modeling using the data map source target concept to push it into an ASO. But I don't believe that you can automatically spin off an ASO cube from strategic modeling. I'll have to follow up on that though.
Okay. Can you enable workflows and tasks in strategic modeling?
Not at present. That functionality hasn't been built in. So you can, I know that those capabilities exist for the other modules, but because this is brand new functionality that was just introduced last month, they're mainly focused on getting the core capabilities of strategic finance into strategic modeling. And as they go along with subsequent releases, they will be enabling more and more functionality, and I would expect that to come in the future.
Okay. How often and what is the process for Oracle to push out software updates?
Yeah, so how often the Oracle will push out updates on a monthly basis. And the process is basically you'll have a QA or a dev environment, and then you'll have a production environment. And they'll send out the updates the first Friday of every month to your QA environment. And then on the third Friday of every month, they'll send out updates to the production environment. So that just gives everybody a chance to test if they want to check out the latest functionality before it gets pushed to the live environment. But that's the essential process. So the great thing is you don't have, in the past with on-premise, you kind of wait around for a couple of years, and then you'd have an expensive upgrade process that would need to occur. Now, going forward with the cloud, Oracle is going to be pushing out updates on a monthly basis. So you automatically get those. You'll be on the same releases as all the other customers that are using EPBCS.
Okay, can you purchase strategic modeling as a standalone product or only as part of EPBCS?
Good question. So the answer is yes, if you have PBCS. So there's two options to license strategic modeling. One is to purchase EPBCS, and then the second option is to purchase PBCS plus the strategic modeling component. And so, I think EPBCS, the list price for that is $250 per user per month. You could also license PBCS at $120 per user per month, but then tack on one additional process. In this case, it'd be strategic modeling for an additional $65 a month. So yeah, there are a couple of methods. You don't have to purchase the full suite. You can buy PBCS plus strategic modeling if that's the only functionality you're looking for.
All right. Well, we've used up the hour. Andy, if you don't mind moving to the next slide for upcoming webinars. Additional questions for this webinar may be emailed to us at info@ranzel.com. A recording of this webinar will be available on our website, where you may also find a number of previous webinars posted. We hope you gained insight from today's webinar. Please visit our website to learn about and register for upcoming webinars, and follow us on social media to get alerts about upcoming events, training, and webinars. We have additional webinars in this series. The next one is on August 16th and provides a detailed real-world look at how organizations like Sims Metal Management are automating enterprise planning to streamline processes and produce better results. Following that, on September 20th, we'll host a webinar that walks through a day in the life of an analyst tasked with modeling and analyzing a plan or forecast with both short and long-term components. Visit our website to learn more about and register for these and other upcoming webinars. Thank you to our audience for joining us today, and thanks to Andy for sharing your knowledge and expertise during this presentation. This concludes today's webinar.